Today's market wasn't loud, but it was honest. Grain slipped back, cattle kept grinding higher, hogs stayed firm, and crude oil quietly moved up again. If you're watching spring input cost or trying to time grain sales, today's closes deserve a closer look. Good morning and welcome to Boots Bushels, your daily look at the markets that feed America. Thank you for spending your morning with me. Let's start with where the markets closed today. Then we'll take a look at the weather ahead and break down ag news producers are waking up to. Grain markets leaned lower across the board today. March corn closed at 428 1/4 per bushel, down on the session. Corn continued to struggle to hold rallies. Export demand remains uneven. Ethanol margins are under pressure, and traders are trying to stay cautious ahead of upcoming USDA data. Right now, corn doesn't look broken, but it also doesn't look ready to run. March soybeans settled at 1061 1/2, also lower on the day. Beans are still fighting heavy South American supply and inconsistent U.S. export sales. The market is having trouble attracting fresh buying interest, and until demand improves, rallies are still running into selling pressure. March Chicago SRW wheat closed at 522 3/4 per bushel. Wheat remains stuck in a sideways pattern. Global supplies are heavy, but the trade is still watching winter weather risk and spring planting conditions as potential longer-term storylines. Overall, today felt like a defensive trade, not panic selling, but a reminder that grain markets still need a real demand-driven catalyst. Livestock continues to be the strongest part of the ag space. April live cattle closed at 238 2 cents per hundredweight, finishing higher again. Tight supplies and solid cash trade continue to support the market, even with packer margins under pressure. Cattle futures are holding together better than most people expected this far into winter. April lean hogs settled at 96.72 per hundredweight, also higher on the day. Near-term fundamentals remain supportive. Traders are still watching export demand closely, but the structure of the hog market continues to lean bullish into February. Compared to grains, livestock is still showing much better underlying strength. March WTI crude oil settled at 61.04 per barrel. Oil has quietly firmed over the last several sessions. Weather remains an important operational factor this week. Cold air is still locked into much of the central U.S. Overnight lows are dropping into single digits across Iowa, Minnesota, northern Illinois, and Wisconsin, with teens across Nebraska, Kansas, and Missouri. Daytime highs are struggling to climb out of the 20s and low 30s. This cold stretch is increasing stress on livestock, especially in open lots and unprotected areas. Producers are being forced to burn more feed and energy just to maintain body condition. Looking ahead into midweek, there's a modest warming trend, but nothing that looks like a real pattern change yet. Most of the Midwest stays mostly dry, which is good for winter wheat stands, but soil moisture remains a long-term concern across parts of Kansas, Oklahoma, and West Texas. No major snow or ice systems are showing up in the near future forecast right now, but the cold itself remains a dominant weather story. Here are the ag stories producers are waking up to today. First, biofuels policy is back in the spotlight. Congressional negotiators confirmed late yesterday that year-round E15 language was dropped from the latest budget framework. Ethanol groups are calling it a setback, and corn demand advocates are frustrated. This keeps uncertainty hanging over future ethanol usage, just as corn struggled to build momentum. Second, USDA rolled out a new online reporting portal for foreign ownership of U.S. farmland under the Agricultural Foreign Investment Disclosure Act. The agency says the move is aimed at tightening enforcement and increasing transparency. Groups are watching closely, and several lawmakers are already calling for stricter limits going forward. Third, farm profitability is still getting squeezed. New economic data released this week shows production costs remain elevated, while commodity prices have not rebounded enough to offset inflation in fertilizer, fuel, land rents, and labor. Several ag economists are now warning that 2026 could be another tight margin year for row crop producers. And finally, cattle supplies remain historically tight. Updated industry data released yesterday shows placements are down, marketings are up, and herd rebuilding remains slow. That continues to support higher cattle prices, but it also raises longer-term questions about how long this tight supply cycle can last. What to watch this week? First, export sales. Corn and soybeans both need stronger demand to stabilize these markets. Second, crude oil. If energy keeps pushing higher, input costs become a bigger story again. And third, any changes in weather forecast. A shift toward wetter or warmer patterns could start changing how the market looks at spring planting conditions. That's your look at the daily markets that feed America. Thank you for spending your morning with me. I'll be back tomorrow at 4:30 a.m. Central Time with a new episode.